So now we already know what are the two type of ledgers and what are the nature of all these ledgers accounts. Now in next slides, I'm going to explain you about how are we going to record all these in our ledger accounts. Okay, as I told you before in previous slides, we are going to record all our financial transactions in a double entry system, which has two sides. One is debit side and one is credit side. Okay, so how are we going to record these trip? How are we going to decide whether to record in debit side or credit side? Okay, so for all the real type of accounts, if it is in, we will record it in a debit side. If it is out, we will record it in a credit side. So what is in and what is out? I will tell you one example. For example, we are going to buy one car. Okay, we are going to buy one car in cash. Okay, the financial transaction is we bought a car in cash. So as we explained in the previous slides, every transaction needs to have two sides. One is debit and one is credit. One is receiving and one is giving, right? So we bought a car. What do we receive? We receive a car. What are we giving? We are paying a cash, right? So one we are receiving a car. One we are giving a cash. So let's think about cash. Cash is what type of account? Cash we can touch, right? Cash has a physical substance. So under this ledger accounts, cash falls under which category? Is cash personal? No, cash is not personal, so it is not a personal ledger. Cash is not personal. So under impersonal, cash falls under real or nominal. Cash has a physical substance, so cash is a real account. We decided cash is a real. So if it is real account, if it is in, we will record it in debit. If it is out, we will record it in credit side. So cash under a transaction of buying a car, cash is we are giving a cash, so it is out. So we'll record it in credit side. Okay, so what about debit side? What are we receiving? We are receiving a car. Okay, car has a physical substance. Car fall under real account. A real account, how are we going to decide? It is in or it is out. We are receiving a car, so it is in. So we are going to record in debit side. This is how are we going to decide whether to record in debit side or whether to record in credit side. Okay, so you just need to memorize here and understand here is all the real type of accounts. If it is in, we will record in debit side. If it is out, we will record in credit side. Okay, for the nominal type of accounts, all the expenses we are going to record in debit side. All the income we are going to record in credit side. That's why I told you guys here, expenses are the debit nature and income are the credit nature. Okay, so these real type of accounts and these nominal type of accounts are impersonal ledgers. Okay, impersonal or general ledgers. So what are the receivable? How are we going to record receivable and how are we going to record payable? Receivable is a debit nature, payable is a credit nature. For all the debit nature accounts, it is debit nature, right? If it is increase, we are going to record in debit side. If it is decrease, we are going to record in credit side. So what is the increase in receivable? What is the decrease in receivable mean? For example, if you make credit sale to your customer, what will happen? Before you are going to make a credit sale, you don't have any receivable. Your receivable is zero. Now you are going to make a credit sale to your customer. You are providing your customer a service. You are providing something to your customer. In return, what are you going to get? You are not going to get anything for now, but we are going to get later, right? So we need to open an account called receivable. We need to record, right? We need to get something back from our customer. So that's what we call increase in receivable. Before it is zero. Now you are going to make a credit sale to your customer. Maybe you are going to sell a computer to your customer. Okay, you give your computer to your customer. What are you going to get in return? For now, you're not going to get anything, but later you are going to get. So you need to record you are receivable from this customer this amount. So from zero, your amount is increasing from zero to, for example, your computer price is 5,000. So you will record 5,000 in your receivable account. So your receivable account will become 0 to 5,000. So it means increase in. Okay, receivable account is a debit data. So if it is increased, we will record in debit side. If it is decreased, we will record in credit side. So what makes receivable account decrease? For example, if your customer make payment for the credit sale you have made, as I explained here, right? You are going to do a credit sales to your customer. So in 1 month later, that customer is going to give you some cash, right? So for example, in January, you have a receivable account of 5,000. You recorded. In February, that customer is going to pay you back that 5,000. So what are you going to do? You need to write off. You need to remove that receivable from the accounts, right? So if your customer make a payment for the credit sale you have made, then you need to reduce your receivable, right? The receivable will become less. So that means decrease in receivable. If decrease in receivable, you need to record in credit side of the receivable account. Receivable account is a debit nature. If something or if a transaction has increased the receivable account, you need to record in debit side. If a transaction has decreased in receivable account, you need to record in credit side of the receivable account. Okay. Then payable. Payable is a credit nature account. If a transaction has increased in, then you need to record in credit side of the payable account. If it is decreased, then you need to record in debit side of the payable account. So what makes payable account increase? For example, if you make credit purchase from your supplier, you are going to purchase something from your supplier. Okay, if you are going to purchase something from your supplier on credit, you are getting something from your supplier, but you are not paying your supplier now. You will pay later. So you need to record as payable to this supplier in your books, in your ledger. Before, you don't have any payable. Now you are making a purchase, credit purchase, right? You are getting something from the supplier, but to giving your supplier, you are going to give them later. You are going to pay them later. So you need to record that payable in your ledger account as payable. That will increase your payable account. So you are going to record in credit side of your payable account. So after 1 month later, you are going to make payment for that purchase. Okay. So you need to reduce your payable account, right? For example, you bought a 2,000 worth of computer from your supplier to do resell. So you recorded 2,000 as payable. You recorded 2,000 as payable in your ledger accounts, right? But next month, after 1 month later, you are going to make a payment to your supplier. You will make a payment to your supplier, right? So you need to reduce your payable because you are already paid. So that will make a decrease in your payable account. So how are we going to record? Decrease in your payable account, we are going to record in debit side. Increase in your payable account, we are going to record in credit side. Right? So for all the debit nature account, if it is increased in, we are going to record in debit. If it is decreased in, we are going to record in credit side. For all the credit nature accounts, if there is any increase in, we are going to record in credit side. If there is decrease in, we are going to record in debit side. I will give you example in next slides. Thank you.